Joining us now and through the day, Sanjay Pugalia, Editorial Director at Quintillion Media, and joining us from Hong Kong to give us a foreign institutional investor perspective on what the outcome of this election could mean for India's economy and markets, Bill Maldonado. Good morning, Sanjay. Good morning, Bill. Bill, excuse me for putting the first question to Sanjay because politics will rule the day today. Sanjay, good morning. What should we expect over the next 2 hours? Key trends in the next hour itself?
Again, going by exit polls, where yesterday some experts made an interesting comment that we should keep in mind, that 90% exit polls have come true. Sometimes they go wrong. So going by that, BJP should have a not only easy, but an emphatic victory. But the mood, the political mood, the background in which the election took place, BJP is not sounding internally that confident about the higher side of number, that is 125, 135, maybe 150. They know that they will be winning it comfortably, but now it is about vote share and seat numbers, and it is anybody's guess. Let's wait for some more time.
Sanjay sir, if I was to switch to Hindi, at one time you had tweeted, as Neeraj keeps reminding you, 1, 0 और 5 को जिस तरह से चाहिए आप अरेंज कर दीजिए, उस हिसाब से इलेक्शन रिजल्ट आएगा. आपको लगता है कि आज सुबह मूड देखते हुए 105 is more likely than 150?
105 plus minus 5 is more likely, yeah.
Plus minus 5, that is. Okay, one quick more question before we go to Bill for his view on what all of this means from an investment perspective. And Sanjay, that is that, you know, I think over the weekend we saw Rahul Gandhi get appointed or anointed as the president of the Congress party. Now, this is a coming of age, so to speak, of the junior Gandhi. And we've seen that play out in some way or the other through the course of the Gujarat and Himachal Pradesh elections, more so in Gujarat than in HP. Even if they were to lose today, do you think that Rahul Gandhi has sort of, you know, made it clear that maybe he's prepared for things to come next year when more states go to the polls, and then, of course, 2019 when the general elections come up?
I think he has made a good beginning. I was being conservative when we talk to many other experts. They say Rahul Gandhi has started his new political innings on a good note from Gujarat. If he loses Gujarat also, if he is anointed as Congress president already, it doesn't impact his political career in any manner. The real test would be to retain Karnataka going forward. Yeah, so what is at stake is more for Mr. Modi and Mr. Amit Shah rather than Rahul Gandhi in Gujarat.
Sanjay, stay on with us. We're joined now by Bill Maldonado to get a foreign investor perspective on what investors are making of the outcome of these elections. And Bill, that is my first question to you this morning. Good morning. Thank you for joining us on BloombergQuint. How keenly are you watching the outcome of these two state elections? And does it really mean much from a foreign investor point of view?
Well, I think foreign investors have been watching and are interested to see the outcome. But I think with the sort of BJP victory last week, I think investors have sort of moved on. There's not a huge deal of concern about it, I would say, at this point.
Bill, we'll have the election outcome, of course, today. Last week, the exit poll showed that the BJP will win. My question to you would more be whether investors like you or people that you advise or people like you who put in money, will the view on India change dramatically depending on the election verdict, whether the BJP manages to retain the state of Gujarat or if there is a surprise victory by the challengers in the state of Gujarat?
I think if there was a surprise upset, different to what the exit polls were showing at the end of last week, I think there might be some temporary impact on the market. I suspect that would be more domestically driven than internationally driven. But I imagine international investors would sort of brace themselves for some temporary impact on the market. But I don't think medium to long term there would be a long-lasting impact.
So would global investors, by and large, Bill, be waiting for a dip to come in? Because India, quite frankly, say for the month of November, wherein FIs put in some money predominantly in the primary markets, have been shying away from the secondary markets in India for a good 3 or 4 odd months. In fact, there have been big outflows from the foreign institutional investors side in India. Can that change come the start of the new year?
Yes, I think it could definitely change. Now, I know that in India, people watch very closely the FII flows, and a great deal of attention is given to those. I would say that in general, they matter a lot less than the attention that they get. For sure, it's a backward-looking measure, so it doesn't help you to think about what's going to happen to the market going forward. And one of the features of the rally that we've seen, this now quite long-lasting rally, has been that it's been much more domestically driven than driven by inflows from foreigners. And I think that's actually very healthy and very positive, and actually reinforces a positive view of India to outside investors. So I would say, you know, people are very interested in India. They want to invest in India. If you've been invested in India during the rally, then you feel very good about it. If you haven't been invested in India during the rally, then I suspect you're looking for places where you may be able to jump in. The issue with India from a foreign investor's perspective right now is that it isn't cheap. Now, you could say that about a lot of markets in the region and globally. The big story, therefore, is I don't think it's politics. I don't think it's foreign inflows. I think the big story is about earnings improvements, and what we're looking for as international investors to India and to many other markets is to see a continued uptrend in earnings, an improvement in earnings. That's what could drive the next leg of this bull market, if you like. That's what could keep the market going in the right direction it's been going in. I think that's by far the most important thing, and that's what we and other investors, I think, are most focused on.
Bill, stay on with us, because I have a question for both you, but first for Sanjay Pugalia, who is the veteran political journalist in this conversation this morning. And that question has to do with how the BJP or the Narendra Modi-led government in the centre is likely to react from an economic policy point of view if they were to lose Gujarat and or Himachal Pradesh today. And Sanjay, do you expect any knee-jerk economic policy making in the months to come if the BJP were to lose Gujarat and or Himachal Pradesh today, but more specifically Gujarat? Do you expect all of that to reflect in the budget? Will it be a more expansionary budget?
Yes, definitely. Either BJP wins or it loses Gujarat. The focus, and actually they will reinforce their commitment towards pro-poor policy. They will become more populist in either scenario. There are new initiatives in the pipeline, like real serious cash transfer to people below the poverty line via direct benefit transfer to their general account using Aadhaar. All those things will get serious impetus, because BJP has faced tough questions from the voter who is jobless, who has spent lots of money on education, doesn't have a job. There is an agrarian crisis, and people have asked them tough questions there. So, and poor people, rural Gujarat is definitely not very happy with the last 22 years of BJP rule. So, even if they win Gujarat, they will focus and they will actually put accelerator seriously on all these new measures.
Bill, how would you respond to a government that loses Gujarat and therefore, you know, looks for ways to be able to be more pro-poor and may even therefore exceed its targeted fiscal deficit for the next year? Is that a macro cause for concern for foreign investors like you, given that you just emphasized that the big thing y'all are watching for is a return in earnings?
Look, I think that's a very speculative question. It's very difficult sitting here today to speculate not only on the outcome of an event but on a response to the outcome of an event. I think it's very difficult to do that at the best of times. What I would say is that over a long period of time, this government has demonstrated that it has a very prudent approach to the fiscal position of India. It's had a very good partnership with the central bank, the RBI, who has also run a very kind of strong macroprudential agenda, stabilized the currency, done a lot of good. So I think at best it's very premature to start thinking about the outcome that you're discussing.
Bill, you were just going back to the point on earnings that you were making from a foreign investor standpoint. Is the best case scenario that all of this political news sort of settles down and the government does not do anything disruptive? I'm using the word disruptive. People may not always have that particular view on it. But you had 12 months of first demonetization, then GST. It's created a lot of cloudiness on economic indicators. It's created a lot of cloudiness on how quickly earnings will recover for certain segments of the market. From a foreign investor standpoint, would you just prefer not to see any large, big policy announcements and sort of let the economy recover and gain that foothold at whatever level it is ready to gain that foothold at?
Well, I'm not sure that I would agree with that, and I'm not sure how foreign investors see this. I think one of the very attractive aspects of investing in India, as well as there being many world-class companies there. I mean, let's not forget that there are lots of companies in India which are listed and domiciled in India, but which are really global companies. There are obviously also lots of very interesting, more local plays as well. But aside from that kind of structure of the market and the relative stability that investors have experienced in India over the last few years, one of the big attractions is the reform agenda of the government. If those reforms bring profitability higher in future years, which probably the reforms that you've mentioned will do, then investors, I think, are always happy to see those kinds of reforms being rolled out, even if perhaps initially there's a little bit of pain associated with it. So no, I'm not sure I would agree. I think investors want the economic reform to continue. They want India to continue to modernize and drive forward, and that's one of the big attractions of investing there.
Sanjay, can I just put a similar question to you in terms of, what would be the economic reform agenda ahead? Lately, we've been hearing a lot about small and medium companies, finance to small and medium companies. One is getting the sense that that is sort of the next area that this government wants to target, whether it's in terms of giving more finance through mudra schemes, etc. But that small and medium segment is where the focus is?
Yeah, I think because of GST trouble, we will soon see some more corrective measures to give them some relief schemes in offering. Similarly, small and medium enterprises will be given lots of financial support by public sector bank, and even private banks will be asked to help them. And as I said, I see cash transfer as a next big theme, and anti-corruption measures will continue. That means a lot of action you will see on black money and economic property also. And there will be a serious push on infrastructure, because all the critique that we are kind of throwing in, government is very mindful of that while we are focusing on pro-poor policies, and that is our key objective, but some action on the macroeconomic side has to be shown, because private investment is not coming in. So there has to be a serious effort to push public investment and in infrastructure. So we will see lots of action right from now, maybe from next week. And budget. Budget, of course, will be the main platform to really give a signal. But budget will be mostly used to give two signals only: pro-poor policies and infrastructure spending.
Bill, I have one final question for you, and that is really, the next year is also going to be dominated globally by, in some sense, the shrinking balance sheets of central banks, especially the Fed. The ECB, of course, we'll see that happen only towards the end of next year, if anything at all. This shift in central bank policy, do you think that will have a big impact on emerging markets and fund flows into emerging markets? Is that going to be the key dominating trend of the next year?
No, I don't think it will be. So as we know, the Fed is the first central bank to begin to normalize its balance sheet. But other central banks, the Bank of England, the European Central Bank and the BOJ, are still in very much expansionary mode as far as their balance sheets are concerned. So if we think about the global picture, there's absolutely no shortage of central bank provided liquidity. Let's not forget that liquidity is fungible. It doesn't matter which central bank is providing it or where the operations are taking place. That liquidity will look for opportunities globally, essentially. So I think if you look at the global liquidity picture, it almost doesn't change next year. So of the many things that investors might worry about from a macro perspective, we would suggest that that's certainly not top of the list.
Okay, Bill, my final question to you. Asia Pacific currently, what would be your pecking order? A clutch of people believe emerging markets in general and certain Asian markets have another 5%, 10% odd upside. 10% is actually a lot, 5% odd upside from the current levels. Would that be a fair estimate? And to you, would you be looking at buying into India currently, or would you wait for a bit of a pullback?
So in terms of upside, I would say that emerging markets in Asia, ex-Japan particularly, still look relatively good value compared to other asset classes around the world. And we would expect the average returns over a long period, over a 5 to 10 year period, to be mid to high single digits. So 6, 7, 8%, something like that on average. But as we've seen over the last 12 months, we can get periods of time when the returns are significantly higher than that. And I think the big boost that we might see to those long run, relatively low forecast returns, the big boost that we could get is on earnings. Because what those returns don't factor in is a period of above average earnings, of above average profitability. So that could be a big positive surprise, or continue to be a big positive in the region, including in India. In terms of pecking order, I think if you look at valuations, the areas that currently look cheap are North Asia relative to Southeast Asia. And I would include India in that. So North Asia, China, Hong Kong, Korea, Taiwan look relatively cheap compared to the other countries. But there's not a huge amount in it. I would say that Asia overall looks very attractive on a global basis.
Bill, thank you so much for joining us this morning. Bill Maldonado there, giving you a foreign investor perspective on how little the outcome of these polls matter from a next year investment perspective, and how the focus is more on a recovery in earnings.